Today I'm going to be showing you how to double your profits on any trading strategy, so let's get straight to it. Hey trader devs, my name's David and welcome to my channel where I go through trading strategies that I find on YouTube and on the web, and then I use code to debunk the bad ones and find the good ones. If you promise not to leave, today we're going to be looking at the most sexy, the most researched terms for trading on YouTube, and that is risk management. I know that it honestly is something that's not particularly researched on YouTube, and a lot of people don't really like risk management, but it is fundamental and important for trading strategies. Today we're going to be looking at one indicator that will help you estimate what is a good position to be entering into the market. If you're somebody that uses a 1%, for instance, of your portfolio to take trades as risk management, this way you'll be able to work out how to increase your net profit, and this is something that I've been looking at recently. I learnt this technique thanks to a course that was sent to me by a hedge fund, and it's something that I have been backtesting for a little while on the boilerplate, and on a simple SMA crossover strategy, which is extremely simple, it has increased the net profit by over 100%. So I guess the best thing is to get straight over to my computer. We'll discuss and have a look at that together, and I'll go through the code very quickly. I'll be adding it to the boilerplate so that all of the David Tech indicators will be able to estimate a better position, and I'll be adding it to the boilerplate and all of my indicators so that you can take better entries and hopefully milk more money out of the market. Okay, let's have a look at that. But if I can ask you, and before we go, if you don't mind just giving a big old thumbs up, and don't forget to subscribe if you enjoy the videos. I do videos Monday and Friday. You can also join me on Discord where I do live streams, and we do code together and things like that. And you can download all of these strategies and add them to TradingView, where you can connect to bots and take all of this automatically. Right, over to my computer. Right, here we are on my computer with the simple boilerplate that I was talking about. This is a very, very simple trading strategy which I use just to test my boilerplate, which is just the core of the David Tech strategies. I use this to test so that I can work out whether the boilerplate updates are working. And today we're going to be taking this 79% net profit, and I'm going to try and at least double it. We have 112 closed trades and a 40% win rate. So look, the equity curve looks okay. It isn't the best strategy in the world, but it certainly is a good strategy. When you look at the buy to hold at being minus 34%, it seems to be not bad. But I want to make that even better. So the idea of today's video is we're going to be talking about this indicator that I've made, okay, which is called risk. You'll be able to download that on TradingView, and this indicator literally tells us where we are in the market and what the position sizes we should be taking. So as you can see, it has three zones. We have zone 1 here, zone 2 here, zone 2 here, and zone 3 here. And in these zones, we're going to be taking different position sizes because, as you can see, when we're in this area here, we're pushing towards the top. And as we get in here, we may be consolidating and looking for a move back down. Now, how does these zones work? Let me just make this a little bit more bigger on my screen here. Okay, how does this position work? Well, let me remove the lines and the zones very quickly, just leaving the middle one here. Currently, this is simply an ATR band. Now, the ATR band, I've also added a couple of other options here. We can use the ATR band. We can simply use the close. We can simply use volume, because we all know that markets where the volume is too low can be areas of consolidation or a potential reverse. So you might want to keep out of those kind of markets. And when markets are much higher, we might want to add much more into our position than when the markets have very low volume. I have also added an EMA or an MA5 and an MA 25 here. These are just smoothing out that close so that we're looking back a bit further before actually taking our entries. The MACD is very good because it takes 2 MAs and then it works out whether there's convergence or divergence. As the 2 MAs get further apart, we're actually taking a calculation of subtracting the fastest from the slowest moving averages to see how far they are apart, and as they're moving apart, that's what actually creates the histogram inside of a MACD. So we'll be able to see whether we're actually trending or getting closer to the end of a trend thanks to those MAs. Now I know that this may seem a bit complicated, but please bear with me, it actually will make a lot of sense at the end. Then I've added volume MA, so that's just a smoothed version of the volume. And then I've added, as I was talking about earlier, the ATR. So if I add back those bands, we'll look at the code and I'll explain how those bands are actually made. So if we look at the code here, I pull the code up very quickly. The code is very, very simple. We're taking the input, so the input is chosen by the user, yourself. We're taking a high set of look back of 100 candles. So what it does is it looks back 100 candles and finds the highest candle over that period. As you can see here, this would have been the highest candle over 100 periods, so we've marked that. And we've continued to look for that, made that as the highest band. And then we have the low, which does exactly the same. It looks back 100 candles and looks for the lowest candle of 100 look back. And then what I do is I divide those, the high minus the low, to get these bands here. And then we just add that third, that gives us a third. We're going to add that third to the lowest and add that, subtract it from the highest to give us those 2 bands here. So that gives us a very much like an overbought and an oversold section and a middle section like the RSI for our risk to reward management. So as I was saying earlier, if you are somebody who takes 1% of your account or maybe 3%, we're going to start with 3%, it makes it easier for the calculations. If you're somebody who takes 3% of your account, maybe you would take 1% of your account here, 2% of your account here and 3% of your account here, or maybe it would be the other way around. If you're looking for longs, you would take something like 1% here, maybe 2% here and maybe 1% here again, or maybe 2 here and 1 here. We're going to backtest to find out what the best combination is, and if you're looking for a short, you may be looking for a 2% here, a 2% here and a 1% here, because you might be at the end of the move as you're coming all the way to the bottom here. So I have started to add this to my boilerplate and all of the indicators. So let's have a look at the strategy backtester here. As I was saying earlier, we're currently at 79%. So if I open the boilerplate and I scroll down, you will now find a risk management section, which was already there. I have to find it each time because there it is. Okay, the risk management section is just here. This part here. Okay, so we have at the bottom here, we have our ATR, which is what I was talking about earlier. Right, okay, so we have our position size here. Currently it is set to manual. I have added 2 new algorithms to it, Dynamic Algo 1 and Dynamic Algo 2. Dynamic Algo 2 1 is very, very simple. It doesn't distinguish the difference between a long and a short, so it depends whether you're using something like an ATR. You might want to do, whether it's a long or a short, you don't really care. You want to do 1 position here, 2 positions here, 3. Algorithm 2 makes a difference between the shorts and longs, so if you're in a long, you might want to do 1 here, 2 here, and 3 here, and if you're in a short, you might want to do 1 here, 2 here, and 3 here. So it makes it a bit easier for us to distinguish the difference between a short and a long. Okay, so let's test some of these out. Right, so currently I will set these back to default, 1, 2, and 3 here. What we do is we go to the position size here, and as you can see, I'm going to add the first dynamic algo here. This one obviously doesn't distinguish the difference between shorts and longs. And as you can see, just by adding that, we've absolutely exploded the net profit here. We've also made a big drawdown, max drawdown, but we've taken our trading strategy from 70% up to 229%. So simply just changing that one setting has made it humongously more profitable. You have to be careful. Obviously, this probably isn't the best settings in the world. You have to be careful as you can see it has started to create a bit of a hard top up over here, and the max drawdown is a little bit higher as you can see, but it's very high at 41%. So maybe this isn't the perfect settings, but it certainly has increased our net profit incredibly. Right, let's have a look at another setting over here. Let's try playing around with the dynamic algo 2. See if it makes much difference. It didn't make much difference, but let's play around with the positions here. So we've got 1, 3, and 2. Let's try putting 1, 1, 1, 2, 1. So the reason being is we'll be taking more positions here, less positions here and here than we would be here. We're at 122%. The max drawdown is now at 20, so we've got an extra 3% max drawdown roughly. But our net profit is much better at 121%. Okay, right, let's have a test with this. I'm going to scroll back down to the risk management section here. And the risk management section, like I said, I'm going to have to play around with these at the position size. So I'm going to actually change that to dynamic algo 2 for the moment, as it seems to me that it's most logical. We currently have the default settings of 1, 2, and 3. And as you can see, we're just increasing that. Let me remove myself from the screen here. As you can see, by just adding that, we have a net profit of 229%. We have 112 trades still closed, so we haven't really changed anything of the trading strategy. The max drawdown is now huge, so this obviously isn't the best combination of DAs, as I've called it here, but we'll look at that afterwards. Max drawdown is now 41%, and as you can see, it has created a bit of a hard top just around here. This area here is a bit of a hard top, so we'll probably look to round 2 try and make it better. Okay, so what I'm going to do now is I'm going to play with the settings here. So we're going to play around a little bit. Let's go for... Currently I'm using the ATR. You can play around to see if the volume would be better. Let's just play with these settings a bit to see what we'd get. Let's see.
Come on, David, and once again he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD. If he doesn't run into any bugs, there will be a new strategy. Come on, David, hurry up. Come on, David, show us what you got. Come on, David, our patience running out. Come on, David, show us what you got.
Okay, so I've been playing around with it a little bit. I haven't had extensive amount of time to play around with it, but I certainly am very impressed with this technique. I've been using this on this boilerplate. Like I said, it's not a real strategy. Well, it is, but it's not the best strategy in the world. And just playing around with the settings here, I've set it to dynamic algo 2. Sorry. I've set my dynamic algo source to ATR. I've also noticed that the ADX seems to work as well, but I'll be looking at that in a second. The ATR I've set to DA multiplier by 1, the second one to 3, and the third one to 1. So obviously, as we're getting into the bands, the middle section seems to be the most profitable area of those bands there. So the other ones, we decreased the amount of money we're putting into the market because they could be more risky options here, or maybe there's just not enough volume to move that market. Or volatility. Okay, so as you can see, I've managed to increase that almost by 100%. We're at 165%. The rest of the trading strategy looks pretty much the same. We haven't got such a hard top up here. We have a max drawdown of 22%, so it's gone up a bit, but not humongously. And like I said, I haven't had a humongous amount of time to play around with that settings. So this is now part of the David Tech indicators, so you can easily add it, play around with on your strategy. You'll be able to make it so that it automatically trades with those settings using using the alert settings, so that it actually automatically triggers those trades with that. Or you can download the risk indicator for David Tech. The link to that is in the description as well, which will help you do it better risk manage. Like I said, thanks to the hedge fund that sent me the video about this. It really does help us to improve the boilerplate. They say that they use this technique daily in their hedge fund. So it certainly seems like a good idea to me to add it to the David Tech indicators. Thanks for staying around, thanks for watching to the end, because like I said, it isn't the most sexy subject of trading strategies, but if you can imagine getting an extra 100% on your trading strategies thanks to a simple click on a indicator, or just downloading an indicator and changing your positions, obviously it's worth the wait, hopefully. So without further ado, I'd like to say thank you very much for watching. Please don't forget to visit Bybit. Bybit is helping support this channel. So thank you very much. Don't forget you can download all of the indicators, links to Patreon and everything is down in the description below. Keep safe, keep coding. I'll see you on Friday, or I might even see you on Discord. Have a good day and I'll see you on Friday. Take care. Goodbye. Bye bye now. Bye.